What's up, traders? I'm Hotshot. This channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. I am not a licensed financial advisor. Please trade at your own risk. With that being said, I really appreciate you taking time out of your day to watch my video. And if you are already subscribed to my channel, thank you for your support. Y'all truly make my days better. If you're not subscribed yet, hopefully we can earn your subscription at the end of this video. Now, in this video, I'm going to take a new direction with this YouTube channel. We have a really solid audience here on this YouTube channel. And again, I appreciate you all for watching my videos, subscribing if you subscribed, and showing the love and support. Now, I've mentioned this multiple times in many of my videos. I am a student, I am not a mentor. So I think it is only right that the videos from here on out will be videos of us learning together and going and applying the concepts that we learn in a video, kind of like a reaction channel. However, we are going to be reviewing videos specifically like Bill's SMC here. This is one of the first videos that popped up on my feed today. He just posted this a day ago. Use this to increase ICT silver bullet win rate by 40%. Insane results. So we're going to watch the video. We're going to give our our thoughts, criticisms, then we're going to go to the chart and we're going to test exactly what he's saying in this video and see if this strategy he is mentioning is legit or complete bullshit. Okay, so let's go ahead and begin watching this video.
Hello everyone, welcome back to another video. In this video, I'm going to be teaching you something which you can do in order to increase your silver bullet strategy, which I've never heard anyone say by 10%, 20%, 30%, whether you use it properly or not. But in this video, I'm going to show you how to use it properly to increase it by a lot, okay? And I'm also going to teach you the silver bullet strategy A to Z, because I know loads of these YouTubers are teaching it wrong in this video. This is the only one you need in order to trade the silver bullet strategy properly, legit, okay? Because I know many people are like, okay, wait for some liquidity to be taken out and then enter your trade, like market shift and enter your trade. But this is not how it goes. In this video, I'm going to tell you how to do this A to Z. If you can't watch an ICT video for an hour long, and you can't watch this video, which is only 10 minutes long, which will teach you the entire silver bullet strategy, which has proven to make people profitable and consistently pass fund challenges and stuff like that, just in the profitability stages, then you're never going to become profitable. So make sure you watch this video to the end. It's only 10 minutes long. If you don't watch it to the end, I don't know what to say to you. You haven't got the correct mindset when you're coming into this. Just click off the video already, okay? So without further ado, let's get straight into this. So how the silver bullet works, first I'm going to go through how it works A to Z properly. So make sure you do listen to this. So we're going to trade it from 9:50 to 11 a.m. New York time. I know I said 10 a.m. before. However, you can trade 10 minutes before just as a window, just to trade as a little buffer, because you might see a trade 10 minutes before this, but this is...
And see, we know this because ICT talks about the little the micros that begin from 9:50 to 10:10. That's the micro that begins the run on liquidity. So you want to start looking for your run on liquidity from 9:50 to 10:10. And then your entry itself comes in the 10 to 11 window, okay?
Strictly the times you need to trade. Anything before this, don't trade it, okay? So first of all, we wait for a run on buy side or sell side liquidity from 9:30 a.m. We don't trade at 9:30 a.m. However, we can look for the run on buy side or sell side liquidity. So for example, let's say there's liquidity forming right here. 9:30 hits right here, okay? So right now 9:30 starts. So let's just say this is 9:30 New York time. Everything's at New York time and I'm on ES1. Also works on Euro USD very well. So once it can take out this liquidity at 9:30, but you're not...
I don't know if it works on Euro USD really well, y'all. I've seen it work sometimes. Sometimes it doesn't. That's something that you'd need to backtest. I'm going to backtest that myself as well. But ES1, from my understanding, it is ES specific because of the 4 handles, 5 handles. I don't know why he has 4 handles. We'll see why he has 4 handles, but because of the 5 handle stop. So anyways,
not going to enter a trade. You can wait for the market shift to happen, and if 9:50 gets hit right here, then you can go down and enter your trade, okay? So that's just what I mean by run on buy side or sell side liquidity from 9:30, and this is the liquidity right here. It can literally just be a low like that. So another thing you can do is displacement in the opposite side of sweep. So as soon as we get the sweep of liquidity, so let's say we sweep this liquidity right here, we get the market structure shift, displacement right here. So the candles which break this high right here have to be very strong, and then that's what I call displacement. But there is also one thing which you can actually do in order to increase the win rate by a lot. So make sure you stay to this video when I show you the live chart examples, and this will literally blow your mind what I'm going to tell you right here. So the third thing is FVG. Literally, when you get that displacement and the market structure shift, look for price to retrace into an FVG, like somewhere here, an imbalance, and then you're going to enter your trade, okay? The fourth one is stop loss 4 handles and take profit 5 handles. This is probably the one that tricks people a lot. So what I mean by this is that when you got your stop loss and TP tool, the TP is right here, the blue one, stop loss is right here. And as you can see, this is number 7 right here. This is 7 handles. So if you move this to 4 handles, this is our stop loss always. As you can see, 4 handles for the stop loss and 5 handles is our TP, and 5 handles being right here. Why? Is because there's the number 5 right here. So that's just what it is. Very, very, very basic. But what you can do to actually increase your win rate, I'm going to show you this as a drawing example, but it's not going to make you know it 100% straight away. So make sure you stay here for the chart example right now. So what's going to make you increase the win rate by so much is look at what price did in Asia session. So Asia session in New York time starts at 7 p.m. Okay, so let's mark out 7 p.m. right here. And you're going to let price do whatever it wants until our trading time, which is all the way at...
Real quick, you guys, before I forget, if you're enjoying the content so far, please drop a like on the video. It helps the YouTube algorithm and the channel grow so much. It's, and again, I really appreciate all the support y'all throw out there. Comment down below, subscribe if you're not already. But I just wanted to throw that out there before I forget.
At 9:50 a.m. Okay, so let's just say 9:50 a.m. is right here. This is 7 p.m. 9:50 a.m. This is Asia session. Of course, Asia session finishes early and London session starts, but we're gonna mark this entire thing up. Let's say if Asia session goes in one trend, okay, so not even one trend, it can do a little downtrend like this and go on an uptrend. What trend was Asia session on? It was clearly on uptrend. So then when our trading time gets hit at 9:50 a.m., then only look for sells, don't look for buys, okay? Because I know many people say just wait for buy side liquidity to get taken out, or market structure, boom, boom, boom. That's not going to work long term for you. This is what's going to take your win rate from that 80%, not even 80, I wouldn't say silver bullets 80, so 60% to maybe 70% or 80%. Or even for the really, really, really small minority, 90%, which is really rare, okay? But I just like being real with you. I'm not going to tell you something which is fake, because if it was real, everyone would pass funded challenges, and only 3% of people can pass funded challenges. So yeah, that's just what's going to happen. If price is on uptrend, then look for a downtrend after 8 o'clock. However, I'm going to show you the chart example now, so don't click off this video just yet. But before I do carry on, I do want to say if you want to join the mentorship, it's literally in a $50 lifetime one in the future. So much content, it's not going to change. So make sure you drop off, and if you want to pay with me in the Discord, the pass is right here, and this 3-week result, which is right here. I'm going to show you this trade.
I just want to see the chart
over
example,
here,
bro, so we could go and test it for ourselves.
So 9:30 being right here.
If you're interested in
So what we're going to do is we're going to mark out our time.
I'm personally not.
So we start trading at 9:30. Let's leave all of these rules right here. We start trading at 9:30. Not trading, however, we start marking out the liquidity points. We can wait for liquidity to be taken out at 9:30. So 9:30 is right here. Now, is there any liquidity which we see? Okay, so what are we going to look for first of all? So 7 o'clock till our trading time, so 9:30, so we start looking at liquidity. Was price bullish or bearish? It was clearly bearish. So what we're going to look for after 9:30 is we're going to look for bullishness. So we're only going to enter buys, okay? So now we can go on the 1 minute time frame and literally just look for the normal silver bullet strategy. So we can look for buys. So we're going to wait for sell side liquidity to be taken out, not buy side. We've got this really nice set of liquidity right here. Now we can wait for this one to be taken out. And we trade all the way until 11 o'clock, by the way. But our real trading time is 9:50 right here. You're only trading around 1 hour and 10 minutes every day, and this 1 hour 10 minutes can make you more money than someone working a normal job. So there you go, the sell side liquidity got taken out. Now we can start looking for our buys. Let's see if new market structure shift forms. Price did break up this high. In fact, it did, with causing the market structure shift. However, what we did is if we run this 5 minute structure right here, then the entry is invalid. Why? It's because this is 5 minute structure, right? Look at it. So it's basic lower low and lower high, higher low, higher high principle, basic market structure principle. So if price breaks this high, we're not going to enter our trade. And there you go, price broke the high, so we're not going to enter our trade. So now we can start looking for another sell side liquidity to be taken. There's more sell side liquidity right here. Now let's wait for this one to be taken. Okay, there you go, it got taken. Now we can wait for market structure shift to form. Market structure shift did not form. We had this liquidity got taken out right there. Now I can wait for this one to form market structure shift. And it didn't really form a market structure shift right here. If you might have said it did, we didn't get displacement. We need displacement, okay? So now this liquidity got taken out.
That's right.
This liquidity zone right here. Boom. I can wait for this one to form market structure shift. And there you go, it formed market structure shift right here.
Yeah, and then there's a gap right there too. I mean, you could say that that's a small fair value gap right there.
How?
But that
And
is a market
displacement.
structure
How is
shift
because it took
off
out this
that
liquidity right
candle
here.
right
After
there.
taking out the liquidity, price formed this structure right here. Price took out the structure with displacement. These candles were very strong when taking out this high. And now we can
Apologies, just had a little distraction there. I had to pause the recording, but here we go.
wait and enter off FVG right here. And that's literally just how it goes. And then where you're going to have your stop loss is you're going to have it at 4 handles.
Hold on.
And when taking out this structure right here, price took out the structure with displacement. These candles were very strong when taking out this high. And now we can wait and enter off FVG right here. And that's literally just how.
Why did he mark this whole candle as a fair value gap? That makes 0 sense. That's not right, right? Like, I know what a fair value gap looks like, but what the
How
heck?
it goes.
That's an order block, bro, that he's marking off. This black candle is what he's marking off, and that's an order block, not a fair value gap.
And then where you're going to have your stop loss is you're going to have it at 4 handles. And your take profit. So 4 handles being right here. There you go, 4 right there. Take profit, you can have it at 5 handles. This is just what ICT says. 5 handles. 1 to 1.25 ARA. Right there, boom. And again, if you do target higher, you can. Why can you target higher? It's because, as you can see, as I did say, Asia session wasn't bearish or bullish. It was clearly bearish. So now you can target bullishness after this. And as you can see, it does end up going way, way, way higher because of the Asia session thing, which I said. So yeah, that's just one example. Now let me show you the second example. And I'm going to let you guys basically try it out yourself, okay? So 9:30 is our trading time. Not trading time, but our trading window where we start looking for liquidity sweeps to happen. 9:30 being right here. And then 10:45, we start entering the trades all the way until 11 o'clock. Being all the way maybe right here. Okay, so anyway, we got our trading times right here. Now we can wait for the 30-minute, and there you go. So what are we going to look for right here? So 7 o'clock all the way to 9:30 was it bearish or bullish? It was clearly bullish, okay? So now we're looking for bearishness for our silver bullet strategy. So let's go on the 1 minute time frame, wait for some buy side liquidity to get taken out because we're looking for sells. So we have to wait for buy side to be taken out, not sell side. There's some liquidity resting right here, maybe. We don't start trading until our trading times, which is 9:50. My bad, I accidentally put 45. There you go. Okay, so the liquidity got taken out, right? The liquidity got taken out. Market structure shift with displacement happened because price broke this low with displacement. And then where we can enter from is we can enter off this because this is a breaker block plus this FVG right here, which is very nice, okay? So now we can literally just enter our trade right off here. And just stop loss 4 handles, which is right over here. Take profit. You can actually target 5 handles. And again, this Asia session thing, which I'm telling you right now, can actually make your win rate much higher also. And it can also make your RR much, much, much higher. But again, if you want to learn a strategy which has a high...
This video is very frustrating, but let's go try it, okay? Now we're going to do it on ES. Now, from my understanding, my chart is delayed by 10 minutes. Why? Because I don't really trade ES like that. I'm just learning the silver bullet. I don't trade ES like that, and I'm not going to pay that large subscription for the ES data as of right now, quite yet, until I'm more comfortable with this. So right here, it says it is 1351, which is 1251. No, that's 151. Right? Wait, no, I'm all backwards right now. Oh my goodness. It says that it's 1351 here. And the time is currently 12:02. So it's about to turn It's about to turn 2 and it's already 12. So yeah, it's 10 minutes ahead. So instead of the 9, he says, what is it? The 9:50? Instead of the 9:50, then we're gonna use the 10 to 11:10. And the move we're looking for is from 10 on my charts, okay? And if you're not paying for the data, then it's on your charts too. Make sure your charts are set to New York, of course, he said. And then let's go and look and see if we had a silver bullet today using what he says, okay? So from 10 to 11:10. And this is all on the 1 minute. And then you delineate your 19 because that's what he does on his too. He says from the Asian range, what was the direction? If it was bullish, you're looking for a bearish move. And if it was bearish, you're looking for a bullish move. So as you could tell, it was very bullish. It was going up. So yes, today we'd be looking for a bearish move. Let's see. We want to see a run on buy side liquidity. Have like this one right here, I guess you could say. You could say that this was the run on liquidity right here, displacement, and then here's the fair value gap, right? Run on buy or sell side liquidity, displacement, and opposite side of sweep. That's the displacement and opposite side of sweep, fair value gap. Boom. Okay. And then we're going to take our short position there. Boom. And then he says 4 handles. And then he says do 5 handles. That was a winner right here. So it looks like we won one today, which was Wednesday. Let's go to the previous day. Okay. Now again, it's if you paid for the data, it would be 9:50 to 11, but I don't pay for the data, so my data is delayed by 10 minutes. So we're going 10 to 11:10. Okay. And then you're looking at 19. He's in range here to midnight. And all that. It was a consolidation, somewhat bearish. So as you can see, it was huge bearish. In this situation, I don't know if we'd be looking for a bullish move because it was bearish. Like he said, if it was bearish, you'd be looking for a bullish move to target these highs and stuff. But if it was bullish, you'd be looking for a bearish move. So that wouldn't work this time around. And was that a run on liquidity? No, it was not. He says to look at it also from 9:30. So that would be 9:40 for me because I don't pay for the data, of course. And then you'd be looking for the run on liquidity. We could say that that was a little run on liquidity here, run on liquidity. There's no displacement. You could say that that was displacement maybe. So run on liquidity with this wick, no displacement. He also says to look for a market structure shift. There's no displacement here, no fair value gaps, but then it kind of shifts structure right here again. Here's a small fair value gap. And then entry, it would tap before our time to trade, but during our time to trade, we were in it. So like, let's just say that we were, you know what I mean, with this big wick as you see. Let's just say we sold there, you know, wherever it closed or whatever. And then we had our 4. This one would have been a winner as well. However, with this one, we weren't following that Asian direction. You know what I'm saying? Let's try it one more. Let's go back one more and see if this strategy is legit. What bullshit. All right, so we're gonna go 10 to 11, 10. $9.40. All right. So from here to here, it was bullish, bearish. It was kind of both ways, kind of ugly. So let's just see what happened. Um, from 9:40 to 10, there was run on buy side right here, big run on buy side. Market structure shifted here. Now there's a small fair value gap right here. Here. Very tiny. Now he used an example of a breaker block. And in this one, the breaker block wouldn't have been hit, right? It would be that last up candle, right? Doesn't look like it was hit. But we had a bullish order block that was broken through, traded through, and retraded back into along with that fair value gap. And it doesn't look like it was during our time to trade, so we didn't enter it. However, it ran out some sell side here. Once it ran out this sell side, oops, ran out the sell side, go down, ran out more sell side liquidity. Market structure shifted right here off of this wick, this green one. Fair value gap here. Could have entered on it right there. 4 handles, 5 handles. That was a hit. So that was a winner. Ran on liquidity here. Here's a market structure shift point. Shifted. But it didn't come back and tap the fair value gap. It tapped into this fair value gap, but that wasn't even, wasn't even worth it. But is this strategy legit? I'd say so. It looks back test worthy. I'd say go check it out. That Asian range though kind of seems a little complicated to incorporate. If it's going up, if it's going down. Overall, you could see that this was like it was up and then it was down. So like what are we looking for? Both? Like which one? What we got to be a little more specific. I think it is back test worthy. Um, if there's anything I can add to it, like he did, probably focus on not only fair value gaps, but also incorporate breaker blocks, order blocks, and things like that, and pretty much utilize the first one that gets tapped into, if that makes sense. Like, for example, if the breaker block is closer to get tapped before the fair value gap, then, prioritize your entry off the breaker block instead of the fair value gap. But if there's, you could do the 4 handle stop obviously here. So that's pretty great. But if you're trying to do this like how he said on Euro USD, if there's like an order block or something up here or whatever, then make sure you put your stop loss to cover all boundaries. But that's just my 2 cents. Of course, I'm a student and I think this video had a little bit of value in it. Shout out to Bill's SMC. If you guys liked the video, please drop a like. Let me know if you want to see more like this. And if you aren't subscribed, hopefully we earned your subscription here. But until next time, Hot Shot is out.